And that means your fund will zig and zag differently than the market.
Best day ever. I've always wanted to learn this stuff. Let's just begin.
Welcome back, Generation Gains. Today we're diving into one of the hottest and most powerful strategies to diversify your portfolio: hybrid investing. If you're a millennial looking for ways to protect your wealth while seizing new opportunities, this video is for you. We'll break down how combining traditional investments with alternative assets can give you a balanced, growth-focused portfolio. We're talking about blending stocks, bonds, real estate, cryptocurrency, precious metals, peer-to-peer lending, and even crowdfunding. Let's get started. So what exactly is hybrid investing? It's about blending different asset classes to create a diversified portfolio that balances stability and high growth potential. Traditional investments, like stocks and bonds, have always been staples for building wealth. But in today's fast-paced financial landscape, relying solely on these can leave you vulnerable to market volatility or slow growth. Hybrid investing combines these traditional assets with alternative investments that have the potential for higher returns and a hedge against risk. Alternative assets like real estate, cryptocurrency, precious metals, and even peer-to-peer lending offer exciting new avenues for growth. These can help you capture gains from emerging markets, new technologies, or rising sectors that traditional investments might not tap into. The beauty of hybrid investing is that it spreads your risk across a variety of asset types while still allowing you to capitalize on high-growth opportunities. For millennials, this strategy is especially crucial. Why? Because as we start to build our wealth, we need more than just stability. We need growth. But growth alone can be risky. That's why hybrid investing is such a perfect fit for the modern investor. It lets you have the best of both worlds. Let's break down why hybrid investing is especially powerful for millennials like us. Millennials are a generation that values flexibility, independence, and seizing new opportunities. We're not just looking for a paycheck. We're focused on building long-term wealth that can weather the ups and downs of the market. Traditional investing methods, like focusing entirely on stocks or bonds, aren't enough to create the kind of returns we need. Let's face it, stocks are great for growth, but they can also be volatile. Bonds, on the other hand, offer more stability, but their returns are generally lower than stocks. So why not combine both? But that's just the beginning. We live in an era where alternative investments are booming. Real estate, crypto, and other non-traditional assets offer opportunities for high returns and greater diversification. By blending these, you can create a strategy that minimizes risk while maximizing potential gains. Hybrid investing isn't just about getting rich fast. It's about managing risk while still capturing growth. In today's world, traditional asset classes alone might not be enough to build a solid portfolio. By diversifying into other areas like real estate or cryptocurrency, you're essentially putting some of your money in safer, more predictable assets, while also taking advantage of potentially explosive growth in riskier investments. In other words, hybrid investing gives you the flexibility to enjoy the benefits of both high-growth opportunities and stable returns, without putting all your eggs in one basket. And for millennials who may have longer time horizons and more flexibility in their investment strategy, this is a great way to ensure both short and long-term financial success. Now that we've covered the basics, let's look at some specific hybrid investment strategies that can help you create a diversified portfolio for the future. Let's start with a classic combo: stocks and real estate. Why is this a powerful strategy? Well, stocks give you the potential for high growth, but they're also volatile. On the other hand, real estate offers stability, as properties tend to appreciate over time, and you can also generate passive income from rental properties. By combining these two, you're creating a portfolio that's well-balanced. While your stocks are growing or fluctuating, your real estate investments are steadily increasing in value and bringing in cash flow. Plus, real estate provides a hedge against inflation and stock market downturns. One way to tap into both of these assets is through real estate investment trusts, REITs, which allow you to invest in real estate without actually buying property. With REITs, you can invest in commercial, residential, or industrial properties and receive dividends without the hassle of property management. Consider adding dividend-paying stocks and REITs to your portfolio. They'll help you build long-term wealth while generating regular income. Next up, combining cryptocurrency and precious metals like gold. Cryptocurrency has exploded in recent years, offering high returns, but it's also risky as the market can be volatile. So how can you balance this risk? By pairing it with the stability of precious metals. Gold and other precious metals have long been considered safe haven assets. They hold their value, especially during times of market uncertainty. By pairing these with your crypto investments, you're adding a hedge against inflation and potential downturns. While your crypto investments have the potential for explosive growth, your precious metals act as a safety net. Consider holding 10 to 20% of your portfolio in precious metals. This can provide a balance and reduce overall risk. Another great hybrid strategy is combining peer-to-peer lending with bonds. Peer-to-peer, P2P lending platforms like Lending Club or Prosper allow you to lend money to individuals or small businesses in exchange for interest payments. This offers higher returns than traditional bonds, but it also comes with more risk. By combining P2P lending with bonds, you get the best of both worlds. Bonds offer a stable, predictable return, while P2P lending gives you the chance to earn higher interest rates. This strategy allows you to take advantage of both safer, long-term investments and higher risk opportunities for better returns. Start small with P2P lending and scale as you gain experience. It's a good way to increase your returns without putting all your money at risk. Crowdfunding is another exciting investment avenue, especially for millennials who are looking for new opportunities. Platforms like Kickstarter or Indiegogo are typically used to fund creative projects, but now you can also invest in startups through crowdfunding platforms like Fundrise, Crowdcube, and Seed Invest. These platforms allow you to invest in early-stage companies or real estate projects with relatively low minimum investments, sometimes as little as $100. This gives you access to high growth potential that was once reserved for venture capitalists and large investors. Combining this with traditional investments like stocks or bonds gives you access to exciting new companies while still maintaining stability with your more traditional assets. Diversify across several crowdfunding projects to spread your risk. The more projects you're involved in, the greater your chances of success. So, how do you get started with hybrid investing? It's simple, but it requires some research and planning. 1. Do your research. Start by learning about the asset classes you're interested in. Understand the potential returns, risks, and time horizons for each type of investment. Don't rush into anything until you feel confident in your choices. 2. Build a diversified portfolio. The key to hybrid investing is diversification. Don't put all your money in one type of asset.